It's about that time of day again here, boys and girls. Welcome back, welcome back. Joseph James, School of Trade, Sideways Markets. This is your nightly newsletter for the 12th day of the 6th month of 2014. Welcome to our nightly newsletter for June 12th, 2014. Are we having fun yet? I can't hear you. Are we having fun yet? This is why we day trade, boys and girls. This is why we're traders, kiddos. Crude, as if we didn't see this coming. Is there anyone on the planet that did not see this coming? We talked about this last night in the newsletter. The violence in Iraq. Oh, I know. To get the news media just fanning the flames. Oh, it's like watching a circus with a parade and it's just what a great job we have as being day traders, right? I feel bad for the folks that have to predict this stuff long term, I'll tell you that much. But being a day trader right now, it sure as heck is pretty fun. Guys, welcome back. My name is Joseph. In tonight's newsletter, we got a jam-packed, exciting newsletter for you this evening, guys. First, we'll start with what happened in the markets today, right? Unless you haven't turned on the television, you haven't spoke to anybody in the markets, you have probably no idea what happened. But we're going to take a look at what happened today. Crude pushes higher, shocker. Gold pushes higher, really? Wonder why? And, of course, the Russell continues to grind lower. Still waiting for that pullback on the old Rusty. We'll take a look at those charts in just a few moments, and we'll show you why I'm not as bullish as all the other folks I keep talking to about the old black gold. Then once we're done taking a look at what happened today, I want to roll the sleeves up and get ready for tomorrow. We got a finally Friday tomorrow morning. We've got some Red Star news here coming in tomorrow morning. Nothing on the calendar late in the day, but we got some early morning news. We'll talk about that. And then, of course, you know how we always roll. Before we finish up tonight, we're going to grab our charts and we're going to give you 3 strategies, or should I say strategies for 3 different scenarios, up, down, or sideways. By the time we're done with our newsletter tonight, you're going to be an expert on what happened today. You're going to know exactly what the news is scheduled for tomorrow, and you are going to be ready for absolutely every scenario that can possibly come your way tomorrow. Are you with me? Make sure you stretch, wear your helmet, mouth guard, right? Hands on the wheel. Let's rock and roll. Before we jump into charts today, I want to remind you guys, head on over to sidewaysmarkets.com, get over to our blog. If you're watching this video right now on our YouTube page, there's a link right below the video. Follow that link. Get your behind over to sidewaysmarkets.com. That's right. We're PG here in School of Trade. PG, of course. Get over to sidewaysmarkets.com. We're having fun here on a Thursday. And 3 reasons why you've got to get over to Sideways Markets. You've got to follow that link. Get over to our blog. The first reason is right below today's video, you get the link to download all of today's charts. All right? Why do I take the time to give you all the ability to download my hard work? Well, if you're a student of mine, you're going to bring those charts with you tomorrow morning to my trade room, and we're going to use those as our guide, as our roadmap. If you're not in my trade room tomorrow morning, you can use these in your own trading or bring them with you to another trade room. Although I don't know why you're going to any other trade rooms besides ours, but you guys are the deal, right? So make sure you download all the charts, all the commentary ahead of tomorrow morning. Second thing, in the upper left-hand corner, we've had an awesome week this week in our trade room in the afternoon. In the afternoon session, I welcome all the non-members, all the guests, to come out and join me. And I want to show you how we not only use this newsletter to profit, but how simple this stuff is. You know, I've been watching charts for almost half my life. But if you're a brand new trader and you've never traded before, or maybe you get a little bit of experience, but you're sick and tired of losing money every day, I want to show you how easy this is. I mean, we use really simple patterns. They're all rule-based. If you can follow a recipe to bake a birthday cake and you want to be a better trader, you got to take me up on that offer, grab that free pass, and I'll see you next Monday afternoon, right? We don't trade Friday afternoons. The second thing here, boy, can I count today? 1, 2, I think the next one's 3. I never said I was that smart. The third thing here this evening, over on the left-hand side, just above my ugly mug, you'll see a spot for your name and your email address. Give me your name, give me your email, and I'm going to make sure that I send you a copy of my newsletter every single evening around 8 p.m. Eastern Time when it's published. So sit back, relax, click on that link below the video tonight if I can talk here, download a copy of my charts, take me up on the offer for the free pass, and don't forget to register for your nightly newsletter mailing list. I think we got it covered, JJ. Let's rock and roll. Roll those sleeves up. So what happened today? Well, at about 5 a.m. Eastern Time this morning, there was a report issued from our White House talking about the violence escalating in Iraq, talking about how they had taken over the city of Kirkuk. There's a bunch of oil there. Shocker, right? And here I thought they were all in Iraq for the nice weather. I heard they've got some great weather this time of year around there. Dusty, a little bit of warm, a little bit of sunshine. All kidding aside, though, big gap up right now. Let's all take a reality check for a second before I go into this chart. Deep breath, all right? Deep breath, everybody. Breathe in, breathe out, deep breath. Let's do a little bit of a history lesson to begin. The last time I checked the history books, we've been fighting over oil for 1, 2, 3, carry the 1, dot the T, about 200 years, maybe more. And as long as there has been television, you know how I'm going to say, right? The news media has been fanning that flame, right? Sensationalizing everything. The fear-mongering is just, it's everywhere right now, right? Everyone I talk to, this time it's different. They've really changed the game this time. I'm sorry, but isn't that what they said when the shenanigans started in Ukraine? Yeah, right. I remember what it was now. If they don't stop this problem in Ukraine, we're going to lose all the oil to the Western world, and blah, 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 blah. Ratings go higher, advertising gets sold. Guys, gals, back to planet Earth. Back to planet Earth. The real traders right now are not looking to buy. If you're loading up your cannons to buy crude right now, I hate to break this to you, but you appear to be just a little bit late. Now, we may have a couple more ticks up. We may get to 110, but guys, this is going to be nasty. So if you want my opinion, right off the bat this morning, I'm looking to sell short. Now, I'm going to give you some opportunities to sell short. I'm going to show you where I'm looking to sell short in just a few moments. But let's talk about what happened today. Now that we've all backed off the ledge, okay? Are we all on the same page right now? The world's not coming to an end. Crude oil is not going to 175, okay? It's not. Your cars are still going to work. Heck, if crude does go to $300 a barrel, guess what? We'll all be having hydrogen cars next year, won't we? All right? Trust me. The end of the world is not around the corner. Now, we do have a scenario right now where we have some geopolitical news that is fanning this flame and causing prices to rise. I'm not sure if you recall, but a few months ago, my exact words were, if this was 2012, we'd be at 105 already. So, guys, this move has been baked in for months. We just got a little bit of a break at the gas pumps ever since, March? Okay? So this should not be a surprise. This should not be a surprise. All right? I've been saying 105, again, since the month of March. So we understand why this is happening. But before you go mortgaging the house, before you go canceling little Joey's college tuition fund and buying barrels of crude oil and putting them in your basement, hold on real quick. All right? Let's be a trader now, and let's remember, we don't buy at a premium. I understand we're all scared. I understand the media wants us to be scared. I understand the price could keep going higher, you're right, but it also could keep going lower. And so what we're going to do right now is we're going to think like a trader. We buy where? We buy at a discount. Are we at a discount right now? No, we're not. So if you think you want to buy right now, take a deep breath and find a place on a pullback. Trust me. This is not the first time we've seen prices jump higher on news in the Middle East. I'm surprised it wasn't higher earlier this year. Okay, so now that we check the history books and we get a reality check, I feel better already, don't you? I feel much better now. Whew. So what happened today? Big gap up overnight. 5 a.m., it was like 4:53 a.m. this morning, right? News comes out, whammo, price jumps up. Wasn't a very significant move overnight. What was more impressive was the fact that if you were with me in the trade room today, did we nail this pullback? Did we nail the pullback? If I have any students watching the newsletter tonight, you better give me a comment under this video. We nailed this pullback. You heard me this morning, guys. We nailed this. I believe my exact words were 105.40, right? But we were at the top of that range at 105.65 this morning, weren't we? So we knew this was coming, right? And of course, this morning we opened up, we waited for it to pull back. I personally thought it would go a little bit lower and then jump into the end of the session. Members, you can quote me on that one, right? This is exactly what we expected today in the trade room. The best trades today on crude were waiting until just after lunchtime began, and then you saw those buyers step in, and it was easy money. All right? We had planned for this all morning, the minute we walked in this morning. So 88 ticks a range, not a huge range in the U.S., but boy, if you measure the whole move here, between the gap overnight, right, you got just shy of 200 ticks. Okay, so about $2 up from the highs from yesterday. Pretty decent move. Gap up, bullish. Now, the one thing I see here that tells me we're probably going to go a little bit higher is the fact that we closed right at the high. But here's the big deal, guys. This is all fear-mongering. This is all fear-mongering. How do I know that? What's different? Well, where's the volume? The volume's still down here at 106. If we saw value in excessively higher prices, the volume would be all piled up at the high. Now, of course, there may be another little bout of violence tonight, right? So there may be something else that comes out tonight that we just don't know about yet. But as of right now, this looks like a bunch of people that got off work, they turned on the television set, and they said, oh my goodness, they're calling for 120, let's buy, right? So that's what it feels like, okay? This feels like a classic case, right, of the fear-mongering that just the news media loves to do, okay? Now, I don't mean to insult anybody who has already bought some crude oil to put in their basement, all right? But trust me, I don't think you're going to need it. So we know we're bullish right now, all right? But a wise trader says the move that I wanted is already behind us. If you missed the news overnight, right, if you weren't able to get a piece of it on the way up, what we did this morning in our trade room was we opened up $2 higher. We found a level of support below us, and we waited for price to get down to that support. We were wondering if price is going to collapse, right, and fill that gap, which oftentimes happens. Big pops is big drops. But it didn't. So we found support here. Once we bounced off that support, as I said this morning in my trade room, you've got to be ready for the buy after it pulled back. If you didn't buy at the 105.68, if you didn't get long at that pullback, you have to be very, very careful right now. Just as fast as this thing took off to the upside, guys like me are going to be waiting to sell the hell out of this thing when it starts to fall and starts to collapse. So a big gap up, very bullish, but again, be careful out there right now because this is the type of stuff that will make you want, well, it'll make you go broke. You can call direction all you want, but getting in with the amount of risk, how much risk are you willing to take? If you buy these highs right now and it pulls back, how much risk are you willing to take? By the time you get out of your trade, all the pain that you take by buying the highs, and then it goes right back up again, guy, they're going to put you in one of those padded rooms with ankle handcuffs on you so don't hurt yourself, right? You're going to go crazy. So be careful buying the highs here. Remember, don't let the market tell you what your plan is. What's my plan? Buy at a discount. Sell at a premium. Don't forget the plan, all right? Now, hold on tight. We're going to stick around here, and I got some great strategies for you if you do want to keep buying crude. All right, and watch this thing go to 112 overnight, and I'll just be sticking my foot out of my mouth, having a little soul for breakfast tomorrow, right? I'm joking around with you. But you know my point of view here on the black gold. Let's keep going. Ugh, Boy, we go from a great-looking chart to what a horrible-looking chart here on the Russell. The Rusty is just, well, it looks a little bit rusty right now, doesn't it? 100 ticks a range. I'm going to call that narrow. 100 to 200 is usually about average range. 100 ticks, I'm going to call it narrow. We close at 1160. We are so balanced right now in these equity markets, it's disgusting. We've got an open right in the middle, neutral, close in the middle, volume in the middle. Now, we've been talking about this all week. Monday, E-minis kick higher, right? It's Sunday, Monday, right? Friday, non-farm payrolls. Monday, we jump up. And then ever since the E-minis, now the Russell didn't do this, but all the other E-minis hit all-time highs again. Everything starts to contract. Check out the ATR on a daily chart right now, and you'll be shocked to see how narrow these ranges are. What's the biggest, most important thing that we see on this chart? Friday's high. Friday's high. Look where we are. There's Friday's high right there. Look where we are here, boys and girls. We went right back to Friday's high. Now, I'm not sure if you remember this from earlier this week, but my exact words were, if we don't pick up and run with this, we're going to eventually collapse and end up right back where we came from. A little geopolitical unrest, a little fear-mongering. You've got gold pushing higher here today. Wouldn't be surprised. So I'm about as bearish as it gets right now on Russell. But here's the big problem. We have no personality. Something's going to happen here. All right? Something's going to happen here. It may be tomorrow. It may be next week. But the reality is being right at Friday's high. Now think about the psychology behind this area. All right? Put on your thinking cap and think about the psychology of this area. Friday's non-farm payroll report. The reaction to Friday's non-farm payroll pushes us all the way up to 1154.2. I want you to remember, traders are human beings. Human beings are creatures of habit. Do you remember where you were when you had your first kiss when you were in high school, right, or grade school, whatever? Remember where you were when you got your first job? Remember where you were on Friday afternoon after non-farm payrolls? Yeah, we remember significant events in our life. So we remember, most traders remember where that price went on Friday. This now becomes the line in the sand between the reaction on Friday and giving back the entire farm, going right back to where we came from. We're there, guys. We're there. We talked about this earlier this week. Our plan was to sell these highs and bring it down. We're there. Now, are we going to go higher or are we going to go lower? That's the big question now. Get me below this 1154.2, guys, tomorrow, and this could be a bloodbath. We get the prior week open. We get the prior low of day. I'm definitely hunting for that prior week open. I'm definitely hunting here, dare I say, the prior week low. 1116 all the way down. 1126, Friday's low. Prior week open. Those are my targets. All right? Those are my targets. One word of caution, though. This price action has been consolidated, range-bound all week. Don't be too aggressive tomorrow. Even though I'm excited for it, I still need to wait for what? What are the three things we look for every day? Trend, levels, what's the last one? What's the last one, guys? Come on. Personality. The personality has to agree with what I'm looking to do with my trend. So tomorrow morning, open up lower, jackpot. Tomorrow morning, we see price moving lower, volume ticks lower, jackpot. But remember, we can't guarantee it. So wait for tomorrow, and we're going to see what happens tomorrow. My worst fear tomorrow, okay, here's my nightmare scenario tomorrow. My worst fear tomorrow is that we open up right here. That's the worst case scenario. If we see an opening bell tomorrow right on top of the prior week high, right on top of the prior week close, 1166, 1165, 1168, right? That's a doomsday scenario for tomorrow. If you see us open up tomorrow and get stuck in the mud around 1166, hang up the charts, grab the golf clubs, and have some fun. It's not going to be an easy day tomorrow. All right? And we may. If we don't see some action tomorrow, be careful. all right, because this market is clearly balanced. It's clearly waiting on something. All right, let's keep going. Now that we have the crude and the Russell out of the way, back to a real chart again, right? That Rusty looks like my play school, my first chart, right? It looks horrible. Now let's go to the gold. Now again, there shouldn't be any surprise here. There shouldn't be any surprise why gold's rising. Why do we think gold's pushing higher? Turn on the television set. Put it to any major news, right? This just in, crisis in Kirkuk, right? Come on, right? Last week it was the crisis in Ukraine. Before that it was the crisis in China. It's the crisis everywhere these days. And of course, every time the word crisis comes in the headlines, gold is going to rise. One of the easiest parts about trading futures. It's almost a guarantee. You see that word crisis across the headlines and you know crude's going up, gold's going up. If the crisis, of course, in the Middle East, crude will be involved as well. So here we have another bullish move. It didn't start out that bullish, which is kind of funny because you can clearly kind of tell the traders got a whiff of what was happening in Iraq. And, of course, sure enough, after 9 o'clock, go above previous high, pull back, and we keep going. So right now here we got a relatively typical range. Wasn't a huge range, 127 ticks. We open near the highs, close near the highs, but look at the volume. Look at the volume here. This is another example what appears to be some fear-mongering late in the day. How do I know that? Because look what the volume is. The volume is still down at 1266. Why do I care about volume? Well, remember, this is a range-based chart, which means we may have had all the volume piling up right here. You can't see those candlesticks on this chart, though. Why can't you? Because unless this price moves up or down, it doesn't plot a candle. So it looks the same, right? That's why we like it like this. I don't want to see the chop and slop. I want to just see the move. The pattern's all I care about. Remember I told you earlier, I'm a pattern trader. If you can follow a recipe to bake a birthday cake, you can trade my patterns with me. So, of course, we come up, we pull back, and we assume there was some accumulation, right? There was a battle of the bulls and the bears there before. And again, the way that I see it is this was just about the time that everybody woke up, saw the newspapers, and said, oh, my goodness, I can't just sit here. I better buy some gold, right? And, of course, gold jumps. I'm not saying we're out of the woods here yet from the buying, but I'm just saying here right now we get a lot of fanning of the fear flame, a lot of fear mongering happening right now. So be aware of the situation. If you're buying gold right now, you better wait for a second because I got another very, very important chart. Gold definitely pushed higher on the fear mongering in the Middle East, but it's right smack dab into some serious daily resistance. Hold on to that thought. All right? So we got a bullish gold, bullish crude, bearish Russell. That fits the bill completely. Now, don't cheat, don't jump ahead. Come on. Let's go through the routine here. Next up, now that you know what happened today, let's look what we have for tomorrow. Now, tomorrow morning, we have 1, 2, 3 Red Star news events. Nothing on the schedule for tonight. Okay, so nothing on tap for tonight. We usually get those late in the day, Aussie, right, Japanese, Chinese news. Nothing on tap for tonight. But tomorrow morning, just after midnight, we've got industrial production out of China. I'm going to go out on a limb here and say that's going to be a pretty important news event. Why? Because I heard that manufacturing is just a little bit important, right, in our with our friends from China. Okay, so we get the Chinese industrial production at 1:30 tomorrow morning. That's going to light the flame. Then we bounce down to 5 o'clock. We got the Italian CPI, one of the bigger economies in Europe, consumer prices. Remember, in Europe, they've been battling what? Deflation. That's why they're paying you to buy their bonds these days, right? That's why they have negative interest rate policies in the ECB. So we got 5 a.m. Red Star News, and then one more at 8:30 tomorrow morning. So if you're looking to party here in the markets tomorrow, you got a full schedule. 1:30 we start. So that's going to get the European traders going here bright and early. 5 a.m., we're going to keep that party going with the Italian CPI. I heard they know how to party in Italy. Those Italians, they know how to party. They know how to party. 5 a.m., be looking for it. And, of course, here in the U.S., we're going to keep the party going. I got to stop using that word. We're going to keep the action going here at 8:30 tomorrow morning. We got the PPI, the Producer Price Index. We've also got some news out of the CAD, manufacturing sales, and we've got consumer sentiment tomorrow morning at 9:55. So here's how you're going to play this tomorrow morning. I assume that all of this news, if we get more news out of Iraq, if the violence continues, that will probably take center stage. All right? Whether we like it or not, the news media is not going to let this thing go. All right? You remember the government shutdown last year, right? Yeah. Think how bad they saturated that, okay? You're going to have kids coming home from school on the school bus tomorrow afternoon if they're not already for summer break, asking about the violence in Iraq, all right? So you're going to probably see that on the headlines tomorrow morning, okay? But we know, though, that these are going to be the background events that hopefully, I'm hoping we have to deal with this whole news fear-mongering thing for too much longer here into next week. But I assume that will be the main priority. So 1:30 tomorrow, 5 o'clock tomorrow, 8:30 a.m. tomorrow. And then remember, it's a Friday. A Friday is not a day you want to go trying to trade the afternoons, okay? I wouldn't recommend it. Only people that trade the afternoon on Friday are people who are ignorant to the risks, that don't know any better, or people who have no choice. Either way, I would not recommend trading Friday afternoon. So once we get through the consumer sentiment number at 9:55 a.m., we then have to start looking at the weekend beginning. Now, here's the reality. This morning, we came in this morning, and we saw that crude oil had traded over 200 ticks, double its average daily move before the day even started. That's what caused that slop and chop dragging lower before it popped higher again. So if you're in my trade room with me tomorrow morning, we're going to be looking at that right away. We may not even make it to 8:30, right? If it moves if we get another big move overnight, up or down, we're going to be dealing with an early finish to tomorrow's trading session. So if you're a London trader tomorrow, good for you. You've got most likely the best window of opportunity tomorrow. If you're in the U.S., be careful tomorrow morning. When you wake up tomorrow morning, you go open your charts. I want you to look and see how much volume and how many ticks of range have been traded. If you wake up tomorrow morning and you see over 100 ticks on crude, that's your sign to be very careful. Okay, that means it's gone and exceeded its average move before the day even began. That's what caused it to be so sloppy this morning. It had made a huge move, and therefore you just didn't expect to see much more. Okay, so tomorrow morning, all eyes on the volume, all eyes on the ATR. We're going to see how that move's happened overnight. If we see a big move in London tomorrow morning, you've got to assume that U.S. traders have already participated, and we're probably not going to get a very easy to trade environment tomorrow morning in the U.S. You know me, though. I'll be talking about that in real time tomorrow morning in our live trade room, so you better come out and join me. Now that you know the plan for tomorrow morning, lots of Red Star news. Let's get ready for tomorrow's trading opportunities. Now, this is my daily chart on gold. I don't look at these as often, right, because they just don't change very often. But right now, we're on gold here, and we're right at some major resistance. So this is the first clue that we're seeing right now, that if you're looking to buy here on gold, I think you've already missed your window. All right, now we're running right into major resistance, top of a channel. We've got our key moving averages now just overhead. We've got our reversal line at 1272.9. We may push higher. We may push up to that 1286.3, but that's a big maybe. So right now, a wise trader on gold says, I've been waiting for this move to happen, right? This has been something we've been waiting to happen for a week or two now. We finally got the move back up. Now we can wait to see if it'll drop back down again. So we're in a great position right now to get short. Again, we might have some more fear-mongering, though, that may continue to push this up into the weekend. But give us some time to cool off tomorrow morning, or over the weekend, I should say, and by early next week, we should be in a position to get short back again on gold. All right? This whole thing in Iraq is not going to continue that much longer. It's not. It never does. So, moving forward here, you can see more reasons here to be short on gold, or at least more reasons to be careful buying gold right now. As you can see, we're running right into this 1275.5, right? We get a bunch of prior support levels here that will act like resistance. We call those reversal lines, right, in our trade room. So, again, we've been waiting on this for a while. So don't forget the plan. Just because gold went higher today doesn't mean we're all of a sudden bullish. Now we're right about the spot we want to be to sell at a premium. I've got sell zones here at 1285.2 to 1275.5. Again, I'm going to be waiting patiently here to see this thing start to collapse. And if and when it does, I've got targets below me at 1254.7, 1243 even, 1235.5, and 1228.3. All right? We'll have to wait and see what happens tomorrow. But again, don't be too aggressive here buying that gold. Here's my final gold anchor chart, and you're going to see here for yourself. First of all, you can definitely tell we're bullish because we got higher highs, we got higher lows, we're above all the key moving averages. But members, if you're a member with me in the trade room, what do we always say about a bull channel? Where's the most difficult place to trade a bull channel? At the highs. That's exactly where we are right now. It gets nasty at the highs of a bull channel or the lows of a bear channel. Where's the best place to trade a bull channel? At the low. And that's exactly what I plan on waiting for. So if you're bullish on gold right now, and I completely understand why, your technical buy will be at 1268.8. 1266.9, 1264.6, 1263.3. Be very careful trying to buy this high. You might get lucky once in a while buying the highs, but over the long term, and remember, we're not playing video games here. We're allocating capital so we have low risk, high reward opportunities. We know we got a bullish trend, but as you can see though, there's that 1275. Right? There's that anchor chart resistance. We're right up in there now. So my job on gold is to wait patiently right now. I want to get us down to that 1268 so I can start buying again. I've got my buyer target at 78.5, buyer target at 1283.9. Those are my targets as we start buying on a pullback. As you know, this is major resistance. So if we get below this support, get me below this 63.3, now we've got that green light once again to get back to selling once again. All right, guys? So bullish here on gold. My gut tells me we probably keep pushing a little bit higher here tomorrow. Again, I think we're going to see that carryover into Friday with that fear-mongering on the television set, all right, and the newspapers and the internet, right? I think you'll probably continue to see it. Okay, so definitely bullish still on gold, but I'm a conservative bull right now. All right, I'm a bull on a little bit of a diet. Right, I'm on a low carb diet here on the gold. I want to keep it nice and lean and wait to buy it on a pullback. Okay, so now you know the plan on gold. Let's keep moving. You know I'm going to make you wait for the crude, right? I mean, come on, right? I'm not that smart, right? But I'm going to make you wait for crude. Here's the Russell. Now, this should be, I know, I'm a broken record right now. We're waiting for a pullback on the Russell. If you've been watching this week, you know we're trying to hunt again for those all-time highs again, right? We're on a hunt here for those all-time highs. S&P did it, Dow did it, NASDAQ did it. The Russell's feeling a little bit left out, all right? The Russell wants to go back at those all-time highs again. The problem is that the buyers got a little bit too big for their britches, if you will, right? Thursday, Friday last week, Monday this week, we jump all the way up, and then all of a sudden the record skips. And all of a sudden everybody just goes, wait. What do we do next? I'll tell you right now, guys, I talk to traders all day long. And the most consistent thing I hear from professional traders is they're buying, but they have no idea why. Imagine being a fund manager. Imagine managing a pension fund, right? Or a couple $100 million of somebody else's money. Imagine saying that to yourself. I have to buy, but I have no idea why. Oh my goodness, that is the definition of scary, right, for an asset manager. If you can't tell me why you're long right now, and most asset managers cannot, it's because the equity markets are the only game in town. There's nothing else to invest in. So we know right now we're bullish on the Russell. We're waiting here, patient, trying to get down to our buy zone. I'm thinking 1150, right? 1148, 1140.5, 1145. We just got to get there. I mean, this has been ridiculous. Monday we jumped up, Tuesday, Wednesday, Thursday, today, Russell. Let's get down to this buy zone, please. Now, of course, if we can get down there tomorrow, you're going to have a whole bunch of buyers loading up on contracts here, targeting that 80.6, targeting that 1200, right? Big round number. And, of course, the all-time highs at 1208.4. You know where we're going. I've been talking about this all week. In fact, I didn't do any work on this chart. It's the same darn chart, right? Give me some work here, Rusty. Give me something to do tomorrow. I need some work next week. All right, let's keep going. Having some fun with you guys. Now that we move to our fastest anchor chart, you can see a lot of this is, pretty much the same stuff. We don't have a lot to work with. And guys, this is one of the biggest challenges. And I said this right on Monday morning. My exact words on Monday morning in my trade room were, we got a problem. We just went right through the roof. We've broken all the technical resistance levels you can see, right? So, all these little red lines here, these are all the prior technical resistance levels. So we blow right through all of them. And now all we have is those all-time highs up top, which apparently are scaring the bejesus out of these money managers right now, for good reason, because they don't quite know why we're going higher. All right? I love being a day trader because I don't need to know why. All I care about is where and when. Isn't that a beautiful thing? I don't care about what the news says. All I care about is when the news is. I'll trade the reaction to the news. It's a beautiful thing. You don't need to overcomplicate this. Just trade what you see. I'll be here tomorrow morning, 8 a.m., to walk you right through it tomorrow morning on the Russell and all these markets. The bottom line here right now, though, is we're staying patient. We got a really difficult job right now on the Russell. If you're itching to trade the Russell right now, I'm definitely short-term bearish, but it's been like pulling teeth to get this thing to drop. Remember this week earlier? We were thinking we got below, what was it, 67, something like that? I was thinking 67 we drop. No. I was thinking 62 we drop. No. It's just been grinding lower. So right now, we're running now into that bullish long-term anchor chart cloud. We've got a long-term trend up, a short-term trend down, a little bit of an identity crisis here, if I may say so, on the Russell. But you know where I'm looking. I want to be a buyer here at 1150 tomorrow, 1148. I'm not going to buy it blindly, right? We're going to wait for price to hit that area. Once it starts to go higher, I'll look for a reversal pattern into a wave pattern right off the bat tomorrow morning, if we get there. Okay, now once again, if we open, remember what I said earlier, if we open, where's that chart? Rusty, where's that chart? There it is. If we open here tomorrow, 67.9, right, around that prior week high, that prior week close, that's your doomsday scenario. Okay, if we see an opening print tomorrow, or if we move lower and then gap up, right, if we fill a gap, if we end up tomorrow morning down here, and then you see those buyers push it right back to 1166, we're done. All right, we're done. So be careful. Okay, again, as always, come see me tomorrow morning, and I'll walk you through the whole thing in real time tomorrow morning in my live trade room. Let's finish up. All right, as I'm speaking right now, this thing's pushing higher, right? 107.39. Okay, so of course, I gave you guys the 106.56. That was my buy target in last night's newsletter. Now we're cruising up here to 107.93. Now again, as I said earlier, this is probably going to keep moving higher here. Again, they're going to keep fanning this flame in the news media. So if you're going to be buying right now, you got to see these levels we have to worry about. First of all, 107.93, of course, that's going to be our next buyer's target. But we are priced well at a premium right now. So I need to wait for this thing to come down. Here's the plan. We continue to see it pushing, right? 107.73, that's my next buyer's target. But again, I can't participate right now. I cannot buy this. Everything I know about trading tells me if I buy this high right now, I lose money. I may not lose right now, but I will lose money over the long term. So be careful, all right? Be careful. We're clearly bullish here on crude right now, but I'm telling you right now, there is a graveyard filled with day traders who get slaughtered trying to buy those highs. So 107.73 is where I see it going here in the short term. But again, I'm going to be waiting for a pullback to keep buying tomorrow. And I'm telling you right off the bat here, I'm going to be keeping an eye out for shorts tomorrow morning and, of course, early next week. Okay, big pops up like this. This is not the first time we've seen this before. I've been doing this almost 11 years now. I've been teaching almost 11 years now. Been trading almost 14 years now. Every time we get this big spike up, it feels like the world's coming to an end. That's the news media wants you to think. And of course, it always ends up coming right back to that 100 big round number. I don't see any reason why this is different. The world hasn't changed that much. All right? So, what we're looking for here is we're looking for a pullback. So right now, my best thing to tell you is be patient. Be patient because the people who are buying right now, they're going to have to take their profit. Wait for it to pull back, and it looks like this may be an active overnight session, which means I'll most likely have to update these buy areas tomorrow morning. But as we stand right now, though, I'm looking right around 105.71 to 105.30. I got a prior trend line down here too. That prior trend line is going to be a magnet here for those sellers. So if I get a chance here to sell short tomorrow, looking for that trend line, right, to be your big target. Okay, that of course will then lead us into potentially more buying opportunities. This is a really tough situation, all right, because clearly we're bullish. Clearly there is demand here now for crude oil contracts. Clearly the fear mongering is working, and clearly we're probably going to keep going higher into tomorrow. So my best advice for you, for all you crude traders out there right now is don't do anything stupid, all right? Don't go leveraging the farm. Don't mortgage the house right now. Everything's going to be okay. But the second thing is keep a level head right now. Buy on pullbacks. Wait for price, right? Get it about halfway to where it came from, right? Find out where it came from. Find out where it's going. Find about 50% of the way, all right? And look to buy it there. But do not buy these highs. Or do buy these highs, right? Whatever you'd like to do. It's your money in your account, all right? I'm telling you right now, though, professional traders have seen this for centuries. And what we're going to do is we're going to stay patient, and we're going to wait to buy this thing in a pullback. 107.73 is going to be your short-term target. I got 108.62 overhead. And then, hey, there's 110. All the way up top, there's 110 at the top of the bull channel. If you zoom all the way out on this chart here, this anchor chart, you'll see we've adjusted that channel. The top of that channel puts you up at 110. All right? I'm not going to sit here and say we can't get there. What I will say, though, is this is nothing new, right? We've seen this many, many, many times before. So 107.73 is a short-term target. You know my point of view. I'm waiting for a pullback. I'm waiting for a deep pullback. And when it does pull back, I'm going to be suspicious of those buyers looking for a short. We'll see how much I'm wrong tomorrow morning, shall we? All right, guys. Now you know the plan for tonight. You know the plan for tomorrow. We got a Friday morning coming around the corner here. Don't do anything stupid here on crude. Remember on gold, running right into major resistance on gold. And the Russell, remember that prior week that prior week close, the prior week high, right? That's your no trade zone. Alrighty? Take that money off at 107.73, and we'll see you guys tomorrow morning at 8 a.m. Eastern Time in my live trade room. Don't forget, share this information with a friend, right? Pass on this information to a friend. They'll thank you for it. Head on over to schooloftrade.com. Join our free trial. You're going to learn more in that free trial than most other educational sites want to charge you for. And then while you're at it, check out the 3 levels of membership. You know, guys, my wife Megan and I, we created schooloftrade.com over 10 years ago because we wanted to be a place where a new trader could kickstart their career in a safe and effective environment. Anybody can give you a couple fancy indicators, a PDF document, and say, out you go. We have the complete small business package showing you how to do absolutely everything you need, from starting your new small business, daily operations, keeping track of profit and loss, building a track record, soliciting funds, you name it, guys. We do this in a safe and effective way. We don't need to overcomplicate it. We don't need to risk a lot to make a lot of reward. My name is Joseph. I want to thank you so much for sticking around tonight. I want to thank you for listening to my rambling on and on about the whole shenanigans out in Iraq right now. I look forward to seeing what the rest of the week brings. You know me. I'm waiting to buy on that pullback, not going to buy those highs. We'll see you tomorrow morning in my trade room. Have a great afternoon, a great evening. We couldn't wrap up the Stanley Cup last night in New York, huh? So one more shot tomorrow night back in LA. What do we got? Game 5. I wanted to wrap up the Stanley Cup Finals last night. I would have been happy with the Kings wrapping it up in Madison Square Garden. But I'll be even more happier to see that cup back on the West Coast tomorrow afternoon. So go Kings, go. See you guys tomorrow morning. Adios, amigos. Bye-bye for now.